G'day trader, Sam here again. Trade to Prosper is the business online education trading platform, and today is Sunday the 3rd of March. Fetch AI, we've noticed that AI tokens are doing well, and we've covered that in the past. I think what's missing is out on YouTube and so on is levels and potential targets. So I'm going to look at Fetch and tell you why I think my targets are justified. We can look at this in a number of ways. We get hide the pitchfork for the time being. We can see that this is like a inverted head and shoulders. Left shoulder, ever so complex head, and probably a right shoulder. Or you can say this is the head and shoulders here. It's a complex one. So if this is our neckline, we have ever so high highs and therefore the breakout. And we've timed that well. I recall taking profit out there for whatever reason, and I can't recall when I went back in. But the target for that is here, and you can see from that there to there is a measured move, and therefore $4.50 is our target, and it's confluent with the 1.414, the way we do our fib extension. Swing one, wave one, two, wave three, and wave four, potentially wave five, further higher. So that we might hit $8, $7.80. That's looking from that perspective. The macro, if this is the neckline, then the measured move is slightly higher, $11. So it's going to be a hard one to work that out. Can we leverage on anything else? In the past, don't know. What we can do also is look at a Fibonacci. If we were to do that, actually just move that across, put that in, reverse it, and again we get confluence with the 1.414 along with that. So that could be a good measured target as well. I'm going to leave this in just to see what happens down the track. So that's one way of looking at it, and we're going to hide these. Right. The other one is a pitchfork, and the pitchfork really fits well with this. So we've got our swing points, reference point. Actually, let's do that again. Our reference point, our swing point, and back down again. And you can see the Fibonacci in detail of the channel, and ever so perfectly hits that line, and we get a response. In the small time frame, it's really on the mark. So if I was to, if it's the same, Binance, yes, synchronize it. Look at that, perfect. Right there. And we get a response, a pullback. So where from here? Not sure, guys. I know I took out somewhere around here. I took that was all-time high. Okay, so we broke out the all-time high, and I took a trade there. I'm just gonna let it run. So we've got these fib levels. If we look at it in the previous time, let's go back to the big one. You can put more granular levels in there as well. So what we do is just copy one of these guys. So that is our pullback, first one. Then the second one, which has more confluence, is this one here. And you can see the response there at the top. So the pitchfork is working very well for us. Excuse me for a sec. So if there was a pullback, I'll be looking for that type of stuff, and then potentially more to the upside. We got our targets, and funny enough, it's in line with this channel, this blue line. This is our 100%, and that is our 200%. And when we hit 200%, it is extreme overbought, and chances are that we change direction. But we're going to leave this in here, and then you can see the other one that's roughly that purple one there and that fib line. So even the pitchfork agrees with certain things. Look at the pitchfork perfectly there on the channels. The middle one even perfectly there. So it's reliable in most cases. And that's pretty much it. This is just covering the big picture. And if we want to look at for any trade possibilities for now, give me a sec. I just want to see if this is confluent. Yeah, it is. Even there in between. So let's have a closer look on a small time frame. Okay. I tend to use 10 and 20 moving average. This is on the 3 hour. Let's make it the 4 hour. Okay, let's look at our indicators. Yeah, it is starting to break down. So I will not look for a trade to go long at all. The trend is our friend. It is going well, but on the 4 hour, could still go. I think what it's going to do is something similar to this here. Let me get the pen out. I think it'll do something similar, just range, but we don't know how much, unfortunately. You can see I'll look for a previous entry there. It's a difficult one, very aggressive. It didn't really stick to the 4 hour one. I think it was more 2 hour at the time. Yep, the 2 hour. And let's put in our MACD. For trends, or small time trends, we need our MACD for finding entrances. It's called cradle strategy, and you can see the bearish divergence kicking in. So before we were really nice with the MACD, the trend, and then we crossed over on the 2 hour. So once we cross over the 2 hour, we don't look at it as a 2 hour trade or trend. What we're going to do now is go to the 4 hour now and let's see our MACD. Even the MACD is showing bearish divergence down here as well. So it's probably wise to take profit. That is a bearish divergence taking place. Who's to say it is not? Yeah, so it doesn't look the best. And if this crosses over, then that's going to drop more. So the 4 hour trend, we had support there. It's probably going to be the 50 moving average. Let's chuck that in there. Oh, we've got it. Just don't know which one it is. All right, give me a sec. That's the 21 daily. Not interested. I was putting the daily. We want for the TGA. Let's do it again. I want the 50 moving average on the 4 hour, and I have not scripted that. EMA, let's put the 50 and the 4 hour. There it is. So that didn't quite touch it. Let's see which one did touch it. It's probably 30. No. Okay, we're going to try that. See if that works. So I think we're going to drop down to this level and looking for an entry. If that's our bottom, 0.5 could be right. Previous 1.27. Not the best strategy that you can use. It's unorthodox, to tell the truth. We need to go to the 8 hour. Let's see the 8 hour. And there we go. The 8 hour is much better for trend trade. So that was our previous support. We'll see how we go. but that is a bearish candle, so I do feel like it's going to come down. Let's look on the small time frame, see if there's a trading potential. Let's see, for short. It does look like it. I'm hesitant to short because it's a bullish market. Here is a strong resistance, as we've shown, but how much of a strong resistance? Bearish candle, bearish candle. It's likely to drop, but we've got support. It's not really worth it because we've got support around here as well. And so shorting it is not really a high success rate. That's 50%. That is our current support line. Want to do a small, yeah, what I like to see is I'll go for a short once it bounces back up. Look for the 50% of 60 Fibonacci. So I feel like if it comes down here, takes out this liquidity, it might just come back up, and then if we get a double top or some sort, then we'll look for a short, much more positive, and then we'll look for those levels going long. Taking out these liquidities as well and hitting the 618, perfect. That might be the case on the 8-hour candle. So yeah, I'm looking for that type of setup, a pullback, maybe a shorting position here, second time around, and then take it from there. So no, I like to trade the range, not in middle. Don't, it's just too risky. Look for the range. 618, previous candle there, bit of a resistance here, and therefore ever so slightly double top type of thing. And there's formation in agreements as well. I'm going to leave that, guys. Please give me a like and share, and I'll talk to you soon. Cheers.